In the last month, Alibaba has dropped almost 14%. And with the Chinese economy still in trouble and Trump potentially imposing 60+% tariffs against Chinese goods, a lot of investors are wondering what is next for China and the companies within the country. And not only will we take a look at the effects that a Trump presidency will have within China, we're also going to take a look at Alibaba's earnings announcement that's coming up here on November 15th. And don't forget, if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into all of that, let's give a quick update on the YouTube portfolio. Before November 4th, it was trading around $53,000. However, after the election results came out, the market spiked up in a major way, and the portfolio is now trading over $56,000. And despite Alibaba dropping almost 14% in the last month, we're still up around 22% on our position. We hold 15 shares in this portfolio. I do have a much larger position in my main portfolio. We also own companies like Google. This has been a very recent buy, only 5 shares in this portfolio, right now up almost 6%. We own Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. Palantir has been absolutely insane. We are now up over 500% on our position. I do also have a couple of dividend ETFs with SCHD, which is up almost 20%, and VYM, which is up almost 24%. And on top of that, I do like to keep a cash pile, especially when the market is trading very high like it is right now. I've been adding to this cash pile, and if we see any sort of pullback, that gives me an opportunity to buy in at a cheaper price. But let's go ahead and take a look at Alibaba. Like I mentioned, over the last month, it's down almost 14%. Year to date, however, it is up around 26%. It spiked to a high for the year of almost $120 per share. However, more recently, we have seen economic concerns creep back into the stock. There have been question marks about whether the stimulus that China has been rolling out is actually enough to turn around the economy within the country. And more recently, we have the results of the election. With Trump coming in as president, there are a lot of concerns about the policies that he might put in place and the effects that they'll have within China, as well as companies within the country. And one of the biggest policy shifts that Trump has discussed around China is potentially imposing tariffs as high as 60% on Chinese-made goods. And he has actually done this before in the past. When he first took office back in 2016, he imposed tariffs of 25% on Chinese-made goods. And interestingly enough, the Biden administration even kept a lot of these measures in place, and in some cases actually widening some of these regulations against China. However, there are some important key differences between now and 2016. One of those being the state of the Chinese economy. The economy within China is very weak right now, and this is obvious by the fact that the Chinese government has been rolling out a number of new stimulus programs. The latest one involving an additional $840 billion to help bail out local governments. Another big shift within the Chinese economy in the last 10 or so years has been what they have been focused on. They have shifted their focus from being the world's factory for low-cost goods to really trying to replicate that success in high-tech exports, specifically things like solar panels, electric vehicles, and lithium-ion batteries. China now accounts for at least 80% of solar panel production, as well as the largest manufacturer of EVs and the batteries that power them. And the export of these items jumped 30% in 2023. The problem with all of this is that the US is not the only issue facing China when it comes to tariffs. Last month, the European Union increased their tariffs on Chinese-built EVs to as much as 45%. But again, today is nothing like 2016, because this man here has been one of the biggest supporters of Trump. That is none other than Elon Musk. And Elon Musk has a very serious vested interest in the success of solar panels, EVs, and batteries within China. And there's no question with how involved Elon Musk has been in politics that he may try and intervene and help stabilize the relationship between the US and China. And in my opinion, I think both countries will benefit from having a good relationship. I think it's a little bit more important for China to actually get along with the US, especially with the state of their economy. So I think they will be looking to make deals with Trump and potentially even Elon Musk to try and ensure a good relationship and good trading conditions between the two countries. And obviously, a better trading relationship between the US and China will impact the businesses within the country, especially big businesses like Alibaba. And right now, Alibaba is set to announce the earnings on November 15th, and analysts have an average EPS estimate of $2.06 with a revenue estimate of $33.43 billion. And overall, this would be an improvement year over year, where they put up around $30 to $31 billion of revenue this quarter last year. However, Alibaba's revenue really since 2022 has basically been flat. And this has really been driven by the slowness in the Chinese economy. Back in 2022, they were still shutting down cities for the virus, and now they have really changed that policy significantly in the last couple of years, but they haven't seen their revenue get back to growth. And over the last 5 years, Alibaba's EPS numbers have been relatively flat. They peaked at an EPS of $9.37 of GAAP EPS for the trailing 12-month period in 2019. However, from there, the pandemic had a huge effect on their business, and it drove their EPS at one point under $1. They've seen it recover since then. However, the current trend is still in the downward direction. On Yahoo Finance, Alibaba has quite a large range for their upcoming EPS numbers. The average EPS estimate is still around that $2.06 that I mentioned earlier, sitting at $2.07. However, they have a low EPS estimate of $1.62, a high EPS estimate of $2.45. So again, almost a dollar difference between the low estimate and the high estimate for Alibaba. And right now, the average price target that analysts have for this stock is $119.66. There's a high price target of almost $150 and a low price target of $85. And some of these most recent price targets have came from Barclays, Bank of America Securities, and Baird. All of these have actually been before the election, but they range anywhere from $110 per share all the way up to $137 per share for Barclays. With a lot of US stocks either trading at all-time highs or 52-week highs, a lot of super investors have been looking for different places to find value, and one of those has been China, because right now a lot of valuations within the country are super low. Alibaba's current forward P ratio is sitting just under 11 at 10.88. For comparison, the Nasdaq is currently trading at a forward P ratio of 30.68, while the S&P 500 currently has a forward P ratio of 24.57. For me personally, as I look at what's happened over the last month, it really doesn't change my opinion on Alibaba. It's still severely undervalued for what this company provides within China as well as to the rest of the world. I think that over time, as China develops its economy and focuses a little bit more on tech, Alibaba is going to be a big winner on that. They are the #1 cloud provider within China, and as the economy develops within the country, that is going to become more and more of a focus. As well as there are still question marks around Trump and his policies around China, I think that that'll play out over time. I do think that Elon Musk could be involved in some of those discussions within China, as well as how Trump will address tariffs in the country. But I think that over time, the two countries are going to benefit a lot more from working together instead of working against each other. And that will benefit businesses within China like Alibaba. But keep in mind, that is all my opinion. I do own shares of Alibaba, so don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. With Thanksgiving coming up here soon, we have a turkey joke. Why do turkeys play percussions? Check the comments down below for the answer. Thanks for watching.